So I think it's safe to say you and I are both very long Bitcoin, very optimistic about its future.
Yeah.
And you have obviously an extensive background in government finance, government advisory, let's say. How, and I know this is a big question, so feel free to use broad strokes. How do you see government bonds and financing changing as the result of Bitcoin succeeding? And when I say Bitcoin succeeding, I mean, massively succeeding, say becoming $100 trillion asset.
Yeah.
To what extent does that diminish or change government's ability to raise capital via bonds and other debt-based vehicles?
Yeah. Look, the bond market is a fiat market. I run the similar risks again that we talked about. I run country risk. If you talk about nations, right? Country risk, which means ratings that change, economic risk, political risks, all kinds of things that can happen to a country. We saw it happening in Mexico. We saw it happening in Argentina. We saw it happening in Greece. Failures. We saw cross default. Every bond documentation has a clause called, and you know that you've been a hedge fund trader, cross default, which means if an issuer like GMAC fails on one payment on one bond, everything is called.
Mm-hmm.
Technically, everything is called at the same moment. If people discover Bitcoin as a means of store of value and raising money with Bitcoin, like El Salvador is planning to do, right now the markets are not favorable, but I think when the markets come back, and they will come back for Bitcoin, El Salvador will do it, the volcano bonds. What better instrument do I have? I don't have a better instrument. The bond markets are so leveraged, you know that, and they are exposed from Monday till Friday, and things can happen over the weekend, and you wake up on Monday morning and your bond is gone, is finished. I remember when it happened in the Asian crisis 97, a few years back from now. I was in my office on a Monday morning and the phone rang, the desk phone in my office. I was at Dresdner Bank, a director of the bank, and a director of the management board. And I had the central bank director of Greece, the Hellenic Republic, on the phone. He said, everything is red, everything is going down. We're exposed to this knock-on effect by Korea and Asia. I need 1 billion Deutschmarks. At that time, still was Deutschmarks. I said, thank you very much for waking me up. I mean, not waking me up, but giving me a Monday morning call, asking me in a red market scenario for 1 billion Deutschmarks off the cuff. I had only one solution. It had to be done through communication to the public that we are doing this. And I decided to do it. The FT commended it as bold and daring after the deal. They wanted a 5-year note, 1 billion Deutschmarks. The spread, if I remember correctly, of Greece was about 70 basis points above Libor, 70 basis points. And they wanted to raise the money at 37 or 38 basis points, the pre-crisis level. I told him firsthand, Spiros, his name was Spiros Papanikolaou, I said, forget it. Everybody goes to the screen, your spread is at 70 over Libor, and you want half of that, the pre-crisis level. I mean, better pricing, better all-in costs, in a massacre. When I thought about it, I said, let's use the press. So I went to Reuters, and we decided to do it with the condition that we can convince the public about the following thing. We said the Hellenic Republic is an EU member, European member since 1981, and it's inconceivable at the time then that the EU will drop Greece okay? Let it default. Since we talk about default risk, it worked. The headline was, Dresdner Bank is issuing $1 billion Deutschmarks at 37.5 basis points over LIBOR for the Hellenic Republic. It worked. It was magic. The bond was sold out the same day. In fact, they called again if they can increase it to 1.25 billion Deutschmarks, and we increased the next day to 1.25 billion Deutschmarks. That was then. Things were a bit slower than today. Later, a few years back now, you saw what happened to Greece. And you saw the draconian measures they had to implement, the austerity measures. Why? Because the European Commission dictated them what to do, and if they don't behave, they'll pull the rug. So in government bond markets today, they're negative yielding assets. Who's going to put money in them? We have almost the World War III happening right now, right? Again, I have a mountain of risk in the bond markets, over leveraged by trillions, and I have Bitcoin, okay, which has all the way to go to eat into the gold markets, to eat into the bond markets, to absorb all the other markets. Why? Because Bitcoin will and is constantly progressing, sometimes a bit better, sometimes a bit less, but it's autark. Let's not forget that. It's completely independent. I have no credit risk, sovereign risk, market risk. Well, market risk, yes. If you speculate on Bitcoin, you have market risk. If you trade it, you have market risk. But if you don't, you save it for 10 years, you don't have. You ignore it. It used to be safe to be in the bond markets, right? 20, 30 years ago, you buy a government bond, you're fine, you had your yield, but we're past that process. I think the bond markets are over leveraged, they are totally unsafe, and they're negative yielding assets. Why would you put money in there? I've got inflation on the galloping. I'm not going to do it. But the banks are still pushing it. They're still printing bonds. The governments are printing bonds. I mean, look at the US debt. Where's it now? 30 trillion?
That sounds about right. I think it's somewhere
Roughly
130% neighborhood of GDP. GDP is
correct.
2020.
Correct.
So yeah.
Correct. Do you think I get a mortgage if I go to the bank tomorrow morning right here and say I want a mortgage? I'm spending 130 of 100? No. Will I give money to a friend? I'll give money. I say, here's $1,000. I don't pay me back. I help you. But will I loan money from my own family to this person or family telling me that they're overspending constantly? I will send them to a course how to limit spending and how to learn how to save. That's a good, like Jesus said, I don't give you the fish, but I'll teach you how to fish. So, go back to biblical times. No, bond markets they have been great in the 90s when I was at work. Emerging markets, they were growing fast, they were evolving fast, the infrastructure was built newly, great outlooks, okay? But today, wherever you look, where do you have a great outlook? No more.
Yeah, even with US treasuries, which are considered to be, coming up through college, they actually called this, it's called the risk-free rate, right? You get the rate of return on a US government bond, and it's presumed to be risk-free, a risk-free return, because the US government has the monopoly on currency production. So they can just print new units of currency, new dollars, pay the bond. So long as the legal monopoly of the central bank is preserved, then you effectively have no default risk, was the presumption.
Yeah.
But I don't, in a post-Bitcoin world, I don't think that presumption holds anymore.
No, it
because
doesn't.
I don't know, people have an option. people aren't forced into treasuries or currencies as a monetary store of value, right? Or you're not forced into commodities and equities even as an alternative store of value. You now have something that has effectively perfected the properties of a monetary store of value. So I feel like in the long run, as Bitcoin succeeds, it actually heightens the default risk of even US Treasury bonds.
Yes, of course.